Dear students, in our previous classes, we have learned about basic concepts of economics, in which we learned about utility, production, consumption, factors of production, and so on. After knowing the basic concepts, we need to know about different branches of economics. Economic theory can be broadly divided into two major parts or branches. These are microeconomics and macroeconomics. In this session, we shall briefly mention the meaning of these two branches, that is, microeconomics and macroeconomics. And other than these two branches, the economic theory, which is further classified into two parts as economic activity and non-economic activity. Meaning of these economic and non-economic with examples we are going to discuss in the later part of the same chapter. So now let us focus on the branches of economics and learn them in detail. Economic theory has several branches, and the most important are micro and macroeconomics. So, in this session, we shall learn the meaning of these two as well as the features of these two branches. In addition to know, in addition to this, we also learn about the economic activity, meaning, and types. First, let us take up microeconomics. We need to know meaning of this term microeconomics. The word micro means very small. So, microeconomics is that branch of economics which deals with the decision making of a single unit of an economic system. They are an individual buyer. When I say an individual buyer, one single buyer or an individual seller. When I say an individual buyer, we are talking about one consumer. An individual seller, we are talking about a firm or a producer. So that means microeconomics studies how the decision will be made by a buyer or a seller. That means a buyer has to decide how much of a quantity or how much or quantity of a particular product to consume, because consumers always give importance to utility maximization, whereas sellers or producers always give importance to profit maximization. So that means an individual buyer and seller, what kind of decisions they take, how much to buy or how much to sell, these decisions of individual buyer and seller will be studied in economics, microeconomics. So it studies about how does an individual decide on how much of various commodities and services to consume. So when I say consume, use, because we know the meaning of the word consumption. When I say consumption, use of goods and services to satisfy human wants. Of course, all of us are consumers. So how much we have to consume, that depends on urge of the consumer, the ability to pay or utility, all these. So how much to consume, the consumer has to decide. Same way, how does a firm decide? When I say firm, producer decide how much of its products to produce, because producers aim is always profit maximization, and the producers control the quantity of the product produced, because if the supply is more than the demand, the price decreases. That's why the producer has to see the profit margin and accordingly what quantity they have to produce, they have to decide. Thus, microeconomics can be defined as the study of economic decision making by micro units, such as individual consumer or producer. To be more precise, this definition will be very simple and easy to understand. Just you can say it is a study of economic decision making by micro units. I repeat, study of economic decision making by micro units, such as one consumer or a producer. Examples: microeconomics is concerned with profit maximizing behavior of producers because producer always aims at maximizing profit, and whereas consumers aim is utility maximization. That means consumer always focuses on getting maximum satisfaction with the minimum resource. So producer's goal is profit maximization, consumer's goal is utility maximization. So microeconomics deals with this profit maximization and utility maximization from producers as well as consumers point of view. Microeconomic variables are as follows. What are those variables? Utility of a consumer, profit of a producer, price of a particular product or a single product, output or the total production of a particular firm. Remember, we are not discussing the total output of all the firms. No, particular firm's total output we are considering. Then income of an individual, savings of an individual. Same way, investment done by an individual, and so on. Now, let us move to the second part, macroeconomics. First of all, we need to know meaning of the term macroeconomics. So the word macroeconomics is derived from a root word macro, which means large. Thus, macroeconomics is that branch of economics which deals with the economic magnitudes. I repeat, economic magnitudes. You have to focus on this word. Economic magnitudes relating to economic system as a whole rather than the microeconomic units. When I say microeconomic units, obviously it is microeconomics. We are saying about economic magnitudes relating to economic system as a whole. Hence, macroeconomics has been called aggregative economics. In a simplest way, you can understand macroeconomics is aggregative economics. That is, it considers the whole rather the micro units. According to Kenneth Boulding, I repeat, according to Kenneth Boulding, macroeconomics deals with macroeconomics deals not with individual income but with national income, not with individual prices but with price level, not with individual output but with national output. See, when you observe this definition given by Kenneth Boulding, clear, first time when you observe this definition, you will have some kind of confusion. To be more simple, you can take three variables here: individual, national income, individual price, price level, individual output, national output. So you have to just start with the word not. That's it. That is, macroeconomics deals not with individual income but with national income. That means instead of studying about one individual income or one person's income, it studies the total value of all the goods and services produced in the country, that is national income. Then, not with individual price. So it will not take into consideration the price of a single product, but it takes the general price level. So when I discussed about the concept of inflation, I have told you general price level. Not with individual output, one firm's output it won't consider. Instead, it considers the entire nation's output, that is national output. So focus on this definition well, learn well. This question will fetch you 2 marks. Anyway, examples of this will include the macroeconomic examples. Variables are as follows. 1. NI or national income. GDP, that is gross domestic product. Third, aggregate consumption. When I say aggregate consumption, it is the total value of goods and services consumed. That is aggregate consumption. Aggregate investment, total investment done in the entire economy. Aggregate savings, the total savings of the entire society or a country. Or even aggregate price level, total employment in both primary and secondary sectors. However, the percentage of poor in total population and so on. Anyway, this macroeconomic variables are these, but remember, if you focus at least 2 or 3 points in this economic variables, that is sufficient. Let us move on to the next. Let us move on to the next slide. However, to conclude micro and macroeconomics, the two branches, we can say a simple definition like this. Microeconomics is a study of one entity or a single entity, like a firm, a business activity of a one person or a single individual. Whereas macro, it is a study of a collection of things, that is, national income, employment activities, aggregative economics, let us call. Anyway, focus on these two simple statements and also Kenneth Boulding's definition clear. Learn well. Both the branches, meanings and variables, focus. Thank you.